Okay, everybody. I'm looking at an outline for 7 or 8 videos which are going to be coming at you over the next few days. We're coming up into the second of the first 2 announcements, and really non-farm payroll fit my expectations for a couple of reasons. Number one, it was very important that the non-farm payroll was actually bullish for the U.S. dollar, and the market just completely shrugged it off. It's also worth remembering that the most recent bullish U.S. dollar information has also been shrugged off. Most of the major pairs are continuing to show that the dollar is weak. You've got the Canadian dollar, the Swiss franc, the Japanese yen, all moving down very aggressively, indicating that, again, the U.S. dollar is weakening. You've also got the pound, the euro, the New Zealand, and the Australian dollar moving up aggressively, also indicating generalized U.S. dollar weakness. This is something that we can expect, okay? The FOMC lowered interest rates. It really was a non-event. Okay, there was a little bit of hoopla for a few minutes, really. You're seeing that one bar right here. This was the FOMC announcement. Spiked up, spiked down, the market went back up, came back down, and it's basically, if you look at it, not very much higher than when it came out, the news came out. So again, just a real non-event. So like I said, I'm not worried about the FOMC. I want to see what's going on with the British pound now and see what the Bank of England has to say as far as their interest rates. They have a similar situation with their real estate market. It's been very blown out of proportion. London real estate, I think, is at an all-time high, even when you start factoring in inflationary levels. So we've got to take a deep breath and just wait. Remember, the key to the system that I talked about at the live event is waiting for the market to show you what it's going to do. Okay, we had the market move it got away from the moving average, so we have this radical move in price, okay, away from the moving average. They're definitely not moving along the same lines. So what we wanted to wait for was a bar which is down and closes in the bottom half. Okay, that, again, this is taking from some of the advanced tactics and looking at this reversal. This is also a candlestick, a bearish engulfing pattern is what this is called. So we have an engulfing pattern. We're looking for a hand up here, which today actually was broken. Okay, but in any event, what we have to do is wait. Okay, the hand now is not here. It could possibly form here. So we need 1, 2 more lower highs in order then to have a hand starting to form on today's session. The main thing to remember, though, is that you don't need to be sitting in front of your computer. I tried to make that point at the live event, but obviously I didn't hit that home enough. This is not something where you need to sit in front of the computer. Who cares what the announcement is? Let's wait and see what the market does and wait for our particular setup. So let's review here some of the possible entries. Remember, I talked about an aggressive entry. The aggressive entry is when you get the radical change here. You've got the radical change in price, and then you get the market closing in the bottom half. Okay, the bottom half of the range. You have an engulfing pattern. The aggressive trader could use this as a short